Imagine you're sitting on $500 million in cash, not invested, not deployed, just sitting there in a bank account. Most people would call that a pretty good problem to have. Michael Saylor looked at that same pile of money and saw something terrifying. He called it a $500 million melting ice cube, and in 2020, he made a decision that the financial world called either the most brilliant corporate move in a generation or the most reckless gamble in modern business history. He took his company's entire treasury and went all in on Bitcoin. This is the story of how a stagnant software company nobody really talked about became the world's largest corporate Bitcoin holder, and how one man's obsession is either going to go down as visionary genius or an absolutely spectacular collapse. Before any of this, MicroStrategy was just fine. If you weren't deep in the business intelligence software world, you probably hadn't heard of it. Publicly traded, profitable, stable, but stuck. Growth had basically flatlined, and the company was sitting on a mountain of cash with nowhere exciting to put it. Its founder, Michael Saylor, wasn't some reckless risk-taker by nature. The guy is MIT-trained aeronautics engineering, but he'd also lived through something that left a permanent mark on him. During the dot-com boom, Saylor had ridden the wave to billionaire status. Then, in 2000, an accounting scandal hit, and almost overnight, his fortune was gone. He watched paper wealth evaporate in real time. That experience never left him. So when the pandemic hit in 2020, and central banks started printing money at a scale nobody had ever seen before, interest rates at zero, money supply exploding, Saylor immediately felt that old familiar dread. He looked at his $500 million in cash and did the math. With inflation quietly eating away at purchasing power every single day, that money wasn't safe sitting still, it was shrinking. Like ice on a warm counter, he started running through the usual options. Buy back stock, acquire a competitor, real estate, gold, the normal playbook. But to someone who'd been burned before, every option looked like a bad bet, inflated assets, in a world he was convinced was heading towards serious currency devaluation. He needed something different, something that couldn't be printed. Here's the part that makes this story interesting. Saylor had actually dismissed Bitcoin publicly just a couple years earlier, but the crisis forced him to look again. And when he looked, he didn't just glance, he went deep. Like months-long obsession, deep reading, everything, studying the economics, the technology, the philosophy behind it. What he came out the other side believing wasn't that Bitcoin was a speculative trade. He came out believing it was digital gold, a solution to a problem humans have had forever. How do you store value in a way that can't be inflated away? Scarcer than gold. More portable. Easier to move across borders. By summer 2020, he was convinced. In August of that year, MicroStrategy announced it had purchased 21,454 Bitcoin for $250 million. Just like that, half the company's treasury into a volatile digital asset that most CFOs wouldn't touch with a 10-foot pole. The financial world had questions. A lot of them. But Saylor kept buying. September, October. By the end of 2020, MicroStrategy was sitting on over 70,000 Bitcoin. A software company had just become a Bitcoin proxy, and they were nowhere near done. Okay, so here's where it gets genuinely fascinating. Buying Bitcoin with your cash reserves is one thing, but Saylor's real play was something else entirely. He figured, if Bitcoin is going up long term, just holding it isn't enough. The move is to acquire as much as humanly possible, as fast as possible. But a software company only has so much cash, so how do you keep buying? You borrow. Saylor pioneered this idea of using convertible notes, corporate debt, to fund Bitcoin purchases. And here's the wild part. He was issuing these notes at 0% interest. Investors were essentially handing MicroStrategy free money. Why? Because they were betting the stock would explode, letting them convert that debt into shares at a massive profit. This created a flywheel that fed itself. Issue debt, buy Bitcoin. Bitcoin pumps the stock price higher, stock price attracts more investors, issue more debt, buy more Bitcoin. They even rolled out different flavors of preferred stock: strike, stretch, strife, each engineered to pull in different types of investors. The whole machine was designed to do one thing: vacuum money out of capital markets and turn it into Bitcoin. Some people called it genius, some people called it deeply insane, most people called it both. Once that flywheel got spinning, it didn't slow down. When crypto hit a brutal bear market in 2022, prices crashing, companies collapsing, the whole industry in chaos, Strategy just kept buying, didn't flinch. Saylor stepped down as CEO that year to become executive chairman, so he could focus entirely on the Bitcoin strategy. That tells you everything about his priorities. Then, in early 2025, the company dropped the name MicroStrategy entirely. They rebranded to just Strategy, because at that point, what else were they? And then came the 42/42 Plan. The goal: raise $84 billion by 2027, $42 billion from stock sales, $42 billion from debt. Every dollar going into one thing. In a single week in early March 2026, they bought nearly 18,000 Bitcoin for $1.28 billion. 1 week. As of right now, Strategy holds 738,731 Bitcoin. That's over 3.4% of all the Bitcoin that will ever exist. The world's largest corporate holder, and it's not even close. Here's the thing though, and this is important. This isn't a clean success story yet. MSTR stock has become one of the wildest rides on Wall Street. When Bitcoin goes up, the stock often goes up harder because of the leverage baked into the whole structure. But when Bitcoin drops, same thing in reverse, except worse. The entire empire rests on one belief, that Bitcoin keeps going up over the long term. Full stop. If that's wrong, or even just delayed by years, the pressure on this company becomes very, very real. Right now, with an average purchase price of around $75,862 per coin, Strategy is sitting on roughly a $6 billion paper loss. $6 billion. And that flywheel, the one that funds everything, it only works as long as investors keep buying in. The moment that faith cracks, the moment the stock loses its premium, or debt markets turn cold, the whole engine could seize up fast. That's not a small risk, that's an existential one. But here's what makes Saylor genuinely different from most people who take big bets. He's not nervous. At all. When people ask if Strategy will ever sell, his answer is always the same. Never. We're not sellers. We're only acquiring and holding Bitcoin. That's our strategy. He's taken the hodl mentality, hold on for dear life, that crypto people joke about, and turned it into official corporate policy, legally binding company policy. His argument is actually coherent, even if it sounds extreme. Holding a scarce digital asset with a fixed supply is less risky than holding currency that governments can print unlimited amounts of. Cash is the gamble, in his view. Bitcoin is the safe bet. Whether you agree or not, you have to respect the commitment. This isn't a trade, it's not a hedge. It's a complete and total conviction. The story of Strategy is genuinely one of the most radical things to happen in corporate finance in decades. In 5 years, Michael Saylor took a mid-sized software company that nobody talked about and turned it into something the financial world had never seen: a publicly traded Bitcoin acquisition machine. He's written a playbook now. Other companies are starting to copy it, though nobody's come close to his level. But here's the question that hangs over all of it. Is Saylor a visionary who understood the future of money before almost anyone else did? Or is he building a castle on digital sand and we just haven't seen it fall yet? I genuinely don't know. And I think that's what makes this story so worth watching. Drop your take in the comments. Is this genius or madness? Because I've seen smart people land on both sides of that one. And if you want more stories like this, the people making massive, unconventional bets that reshape industries, subscribe. We dig into this stuff every week on Stag Research.